voice in your head says, why am I watching this? We did it.
Yes. And now just in time for the blowers to come out for landscaping.
Oh. Yeah, that'd be great. We'll see leaves flying past your head. And well,
I thought I
welcome,
found a nice
Tina.
quiet spot.
Yeah, welcome, Tina, and thanks for joining me this morning. It's I've been pumping this up and letting our viewers know that we were going to kind of dive in and just speculate about what's happening and talk about what we're seeing. And no better expert than you, a senior analyst with the Cromford Report. I quote the Cromford Report probably too much. They're probably so tired of hearing about it, but it's our source for everything. So.
Well, yeah, thank you. We are unique to Greater Phoenix. We're only in Maricopa County and Pinal County, and we have a very unique relationship with the local MLS, the Arizona Regional MLS, and we have permission to download the data every day, and that allows us to dig really deep into each market within our valley. But we're only here for the real estate professional.
Yeah, and it's and none of you are realtors, right? I mean, it's just you're.
Oh, we are.
Yeah. Oh, okay.
We have licenses, of course, and I do have a license myself, but I have just enough experience in buying and selling to have absolute empathy for what you guys are going through right now.
It's rough. I mean, gosh, here's one of our viewers. I'm moving to Arizona to buy a home. Well, give us a buzz. Everybody's moving to Arizona to buy a home. So it's tough out there. We're going out and we're just showing homes and we're writing contracts and going home and didn't get the home. And so there's really like two burning questions that our viewers have all the time. And is, when is this madness going to subside? And is there going to be a crash?
Well, those are two separate questions, of course. We have
Yeah.
the madness that is lines around the corner to view a home, multiple contracts, not just 2 or 3, like 8, 10, 15 contracts sometimes. So there's that madness. And then there's the question of what prices are going to do in response to it. So I think we can all agree that the current madness that we're under is not sustainable. This type of price appreciation that we're seeing usually doesn't last for a very long time, but that does not mean that it will come down. It just means that it's not going to be sustainable at this rate. So the issue that we're having in Greater Phoenix is, prior to this, about a decade prior to this, the builders stopped building in line with population growth. So the first, from about 2000, or at least 2000, we were overbuilding for population growth for about a decade. By the time 2008 came around, and the mortgage meltdown and all of that, what it did is it revealed this glut of housing. We had too many homes for the people who lived here. The population growth did not sustain the number of housing units we were putting on the market every month. And so with that, we ended up with too many homes. That's what caused the price declines in 2008.
Yeah, I remember that.
And all of that. But the overall issue was too many homes for the number of heads that needed a roof. Now, over the last 10 years, what we've seen is a lack of building, and now we have too many heads and not enough roofs. And that's not something that's going to be fixed overnight. And it only got worse in 2020 when we had a massive, influx of people coming in from various states to purchase homes, and more people are staying in their home because there's no place for them to go. So this is a completely different situation. But the question is, will prices continue to increase at the rate that they're increasing? That's probably not the case. I think that it's reasonable to expect that our prices will eventually stabilize out, but it won't happen this year. The best thing we can hope for is that they'll slow down in their appreciation this year.
I'm kind of hoping that the bidding wars will. I can barely hear that leaf blower, so
Okay, good.
it's
Thank you for
probably
that.
much louder on your end than we're hearing.
It's loud. I was getting a little insecure about it. Thanks for
No,
telling me.
no, it's just like it's like a little bee flying around your head. That's it's smack. So
It was just so you know, it was very quiet right before we started.
yeah, well, you live by the tech and you die by the tech, right? So when we look, I keep hoping. It's like every 3-month prediction I make has been wrong. That's how you just can't even look and say, okay, well, in March I expected that as we looked towards October that we'd start seeing these white collar layoffs because business is so bad, and that'll make some people sell and move. And I think that's happening, but they're happening somewhere else and they're moving here.
Well, here's the thing with the employment situation. It's been very uneven in how it's affected people. Frankly, unfortunately, it has not been on the high end, high tech, high paying jobs where people do have the ability to work from home. It happens to be more when you look at the demographics of who's claiming unemployment, you're looking at people with high school education or less, management, even in the 45 to 55 age group. And so that tells us that we're probably looking more at tourism industry, management of custodial services, different types of managerial positions that cannot be moved to work from home very easily, and also are not necessarily a high technologically based position. And so that's the huge gap. And so while
Yeah.
we do have a very high unemployment rate, the people coming here and the jobs coming here are more lucrative, and they don't have the same issues. And so I think that's why we've seen such a different reaction to our unemployment rates. In
Yeah,
terms
I think it those people were probably going to try and get ready to buy, so it's not really a big number. But
of,
this is a common question I get. What do you guys think prices are going to do in Bullhead City or Kingman? I mean, this is a problem statewide, right? I mean,
well, we are not, the Cromford Report's not in any area other than Greater Phoenix. So I'll just preface by saying that. But I can tell you that if you're not seeing a lot of vacant homes, the number one risk to prices for housing is vacancy. If you're not seeing rents decline, then you're not seeing a lot of vacancies in either homes uh, for owner occupancy, for ownership, and you're not seeing a vacancy in homes for rents. When you start to see rents decline, that generally only happens for one reason, and that's a vacancy. And that's
yeah,
a vacancy that lasts for too long, which means that people might be moving out. So when you have more outbound than inbound relocation into your area, then that is a red flag for the potential for housing to suffer. It depends on what that looks like. You also have issues if you're building more units than your population growth. And in some counties that has happened. That's not something that I've seen in Bullhead.
I've seen. It looks to me, and like Tempe is overbuilding by ASU with the large luxury apartment complex. Is not the case?
I don't think we can overbuild units. Now we can overprice units, but we can't overbuild them right now.
Yeah.
And so the risk that those investors are taking on is whether or not they can actually get those types of renters who can afford those types of rents. And if they can, then that's great for them. If they can't, that's a risk they took on. They'll have to figure out what they're going to do with rents.
Yeah, I just
After.
can't connect the two words luxury and college students in the same sentence.
Well, it's not just about college students in Tempe. If you'll remember, we have a ton of high-tech jobs that have gone into Tempe over the last decade, and they still continue to grow. They're in everything from sciences to insurance. All kinds of industries have gone into that Tempe Town Lake area.
Well, John asked, should I buy or rent a while or just buy? It's, it's a personal decision and depends on,
No,
no.
I do not recommend renting.
Yeah.
If you have the ability to buy, I suggest you buy.
Rent's not going down anytime soon.
No, exactly. I would say if you're looking for stability, then a 30-year fixed mortgage is the way to go. There's no guarantee that rents will not increase over the next year. We just don't know what rents will do. But I can tell you that if you can afford to buy, it's a good time to buy. It's not fun when you have multiple offers and there's a lot of stress and you might lose a home you love. But when you do land one, you can expect in this market, your home will appreciate. You will not get that if you rent.
Yeah, and here's a classic example. I offered on 2 houses a couple of weeks ago in Surprise and Goodyear, and it's tough out here. Do you think prices will go down on the west side of town? And you guys had on your report this morning 2 zip codes that don't have any homes.
That's right.
85012, which is near me. I mean, there's some beautiful homes in that zip code. And 85378, which is a zip code in Surprise. No listing.
That's right. And it's an 85012. And just to be clear, those are single family homes. No single family listings available.
Yes.
They do have some multifamily or condo townhome listings in 85012, but to have 0 listings is very unusual for an entire zip code.
We're down below 4,000 again this morning. We're at 3,978 homes. And I was reading an article, and it says it's from MBS, with protections expiring, millions are in danger of losing their homes. And that's what the headline says. But then when you go down and start reading the details, they said an estimated 263,000 families are seriously behind in their mortgages and not in forbearance. That's not millions of people, but it means that there's a lot of people that are behind on their mortgages, but there's only 263,000 of those that are not in forbearance. The people that are late are just going to tack it on to the end of the loan, aren't they?
Well, here's the thing. We have lots of choices as a homeowner today that we did not have if we were in distress in 2008. For one, you can just sell your home. You don't have to go through foreclosure. Yes. You just sell it.
The average equity is like 200,000. So
with the gap between the number of housing units and the number of people here who need a roof, you're going to have no problem selling that home if you need to outright. Now, always talk to your lender, because according to many lenders, you can have a series of on-time full payments and be able to refinance. Now, if you took all of your mortgage payments and went and bought an RV and went into more debt, then that's probably not an option for you. So you'd be very careful if you've taken on more debt while you're in your forbearance period, especially that kind of debt. But overall, if you've pretty much did your best during that forbearance and you can make those payments again, got another job or whatever, you can look into refinancing. You can also borrow off of your 401k. That's something that wasn't available in 2008 either. Everybody's 401ks went down to $1. Wait. So you can borrow off from yourself and pay yourself back, get yourself back on track with your lender. Always talk to your administrator, your 401k administrator over that. But yeah, that's also an option for people. And both of those allow you to stay in your home. Now, you can leave your home. Right now, rents are more than mortgage payments. You could turn that into, you move in with somebody, rent that out for more than your mortgage payment and get caught up. That's an option as well. You can also sell that home, after a few on-time full payments, you can actually qualify for another home, qualify for another mortgage that might be lower for you. That's also something that wasn't available in 2008. And then finally, again, you can just sell your home, walk away, go rent if you need to, if that's the best thing for you, move in with someone. But you can keep your credit intact and even walk away with your equity at this point. So again, not something that was available in 2008. So this is one of the reasons we're not expecting a huge impact of foreclosures after this. But we might see, and this is might be a good story for a buyer who's been struggling, but we may see some more inventory come on after forbearance is over.
Yeah, not enough to make things tank at all, though, but definitely a possibility that there's enough to where the bidding wars are not as nuts,
Right.
It could be interesting. Here's Emma said, should I list my Phoenix home for sale now or wait? It was a rental that is now vacant, ready to list in about a week, but not sure if I can get more money later. I no longer have a mortgage on it.
That's personal decision. So right now I can tell you that if you hold on to it, the likely scenario is that it will continue to appreciate. We are not at the peak of price. And if we were at the peak of price, that's not a good time to sell, actually, because that's a buyer's market. You never want to be working in a buyer's market. People think it's good for buyers. It's not. Buyer's markets are not good for buyers or sellers because prices are declining. You don't want to buy at the top of the market and watch your home value decline. That's not fun for people. And if you're a seller, you don't like it because you're paying concessions. If you wait too long for the peak of the market, next thing you know, you're paying a concession. You've got one offer, and it's got contingencies. You've got to pay for a bunch of stuff, and you're happy to get it. That's what it looks like. And if you've got anything wrong with that property in a buyer's market, it's not about whether or not you'll get your price. It's about whether or not you'll sell it at all. So you always want to be selling in a seller's market.
Everybody wants to be at the peak.
Huh?
Everybody wants to be at the peak.
It's overrated. The peak is overrated. You don't get multiple offers at the peak of price. You get one offer at the peak of price, and it's terrible
after a month.
in your mind. And the same thing for buyers. You don't want to buy at the peak of price. You want to be able to buy your home and watch it appreciate. That's what people like. Now, there's no indication right now that prices are going to decline. The best we have is that they might go stable. Once we hit a balanced market, they may go stable. See, the only thing that would cause us to go in a buyer's market is desperate sellers. They have to be desperate to sell at any cost because they have no choice. And we don't really have a lot of those right now. We don't have a lot of desperate sellers. We have some desperate buyers, but we don't have desperate sellers.
Yeah, I think the hard part is let's say I'm somebody that's going to go purchase a home, this week, and I've got $50,000 that I've saved. So when you go out, you hope to use a portion of that for your down payment and then finance it and then hang on to some of the other money so that you can, make improvements on the house or just at least have a nest egg, a cushion. The problem is you're going out and you're looking at that house, and after you've been outbid about 6 times, you make the decision that you're going to eat up that entire 50,000 just so you can win the bid. And that's what's heartbreaking to see.
Yeah, and that is heartbreaking. That is just where we are right now, I am afraid. Yeah. And so in some areas, here's a perspective to come in from if you are considering going over asking price, which, by the way, 40 to 55% of all the properties under 600,000 are going over asking price.
Yep.
I mean, 40 to 55. And they're under contract with an accepted contract in 5 or 6 days after going active. So it's you don't have that much time. But here's the thing. If you see, and this is why it's important to go with a real estate professional to do this math for you. If you're seeing property values in your type of property in your area going up at, say, 1% a month, which sometimes they are, and you're going 3% over asking price, you're just paying in advance for what it's going to be worth in 3 months.
True. True.
And so your appreciation doesn't start for 3 months. That's how that works.
Oh, I got you. Okay. Yeah, that's a good way to look at it.
So you're paying in advance for where you feel the market's going to be going, and that's not an unreasonable expectation right now.
Yeah.
And you shouldn't be too concerned about what the home is worth in a year, because you shouldn't be in the position where you're going to sell it in a year. The only people who should be worrying about what it's worth next year should be flip investors, short-term people. And if you're a short-termer and you're not an investor, then you need to go rent for a year if you're not sure what you're going to do, because we always
you're not buying a stock.
Be long-term, 3 to 5 years of holding before you consider where you should be. Now, we don't do those kinds of projections because you never know what's going to happen in 5 years. But we can tell you that on the short-term track, right now prices are not slowing down. We're not expecting them to really start to slow down in their acceleration of appreciation until the latter part of 2021. So I don't.
Are there any other cities that are kind of in the same boat with us in other states?
Yes, probably.
Yeah.
You've got.
But we don't know because we don't track it, right? Yeah.
Places where New Yorkers like to go: Florida, Idaho, Texas. Nevada, probably. I'd say who's not in our boat, San Francisco, where rents are declining. New York City, where rents are declining. If you see rents decline, that means you have more people leaving than coming in. California has lost people. And so, again, if you're watching the rental rates, if rental rates are coming down and price values of homes are still going up, then I don't like that. I don't think that's a good indicator.
Downtown Seattle's experiencing that right now for different reasons, but their rent is plummeting.
Yeah, see, if you see rents plummeting at the same time housing values are rising, again, the only reason a rent comes down is because it's vacant. So it's a huge red flag if you see property values continuing to rise when rents are declining. And I say it's a red flag because if you ever need to sell that home, there's nobody there to buy it.
Yeah.
That's the problem. Mm-hmm.
I see that happening usually first in condos.
Mm-hmm.
Condos are always the last one to go up in price and the first ones to come down. And so when you start seeing condos hit the market, that looks like a real red flag to me.
I don't know about that. I don't know about that. At this point, that's not, for me, that's not a red flag. For me, if it was vacant, we saw a lot of vacant condos, then that's a bigger red flag. Like I said, if you can't rent your condo out right now and it's hanging on the market, see, what we're looking for is true housing demand as opposed to false demand. So false demand, which is what we had in 2005, is a bunch of people buying and selling condos and townhomes and single families with no intention of living in it, no intention of putting a renter in it, just flipping to themselves and raising the price every time, taking advantage of mortgage programs. They call them mortgage cashback schemes, all kinds of stuff, taking advantage of all that loose lending. That created a lot of false demand. There was nobody who actually wanted to live in the home. That's the problem. You had a lot of vacancies. The reason you had a lot of condos go up and condo conversions back then were because apartments were cheap. It was real cheap to buy an apartment and flip all of the units for individual ownership because there was nobody in them. Now apartment complexes are too expensive to do that because they're full. Does that make sense?
Yeah.
So you look for vacancies, and right now Phoenix, the vacancy rates are very, very low. And
it doesn't look, I mean, even, the big reset coming at the end of March where, the rent moratoriums and the forbearances are supposed to end. That seems to be what everybody's watching, at least the people that study the numbers. So, a couple weeks into April, those doom and gloomers, will let us know if they're right. And it's even the numbers, and you guys talk about CoreLogic a lot. And I read that again this morning that, they came out with a forecast that said we were going to be up, 3%. I think I wrote it down here. In June, they said we were going to go down 6.6%. And we actually went up 7.7 in 7 months.
Yeah, we can tell. CoreLogic has a lot of predictions from last year that we're going to be holding over their heads coming into this year. I'm sure a lot of wrong predictions. And here's the great thing for us. Because we have MLS access, we actually get a head start on a lot of these, the CoreLogics and the Case-Shillers of the world that track pricing because they can only do public record sources. And
they're a good month or 2 months behind.
Yeah, because we get the MLS, which has got about 80% market share of all the sales. We get a kind of a head start in predicting where the prices are going to be in the next 4 to 6 weeks. Specifically 4 to 6 weeks, but then also 3 to 6 months out. We can tell you that prices are going to continue to appreciate for at least the next 3 to 6 months. And again, with supply under 4,000 listings, just to give you an idea, a normal supply for this time of year would be about 25,000 listings.
So even if we got this wave of forbearances to hit the market, that might help us get closer to normal instead of a dip.
And just to put it in perspective too, last year during the pandemic, when everything shut down, we saw a boost of supply from the vacation rental market. A lot of people put their home up on the market for rent or for sale. And that lasted 4 months. Our demand was still so high, even though people were told to stay home, they didn't. And they went and bought homes. That supply boost only lasted 3 to 4 months. And so if we saw a boost of say, new inventory coming on because of people coming off of forbearance, I expect we will see a similar boost, and it will not last forever. So the buyers and their buyers' agents are going to have to be on their toes, first in line for when those do come on. And what you might, which is what we saw during the pandemic, is just a slowdown in price where it just kind of paused for that period of time, and then it shot back up when it was over.
I remember listening to you talk when we were talking about vacation homes at one of your presentations, and you said, you might know a lot about real estate, but now you got to be an expert in the hospitality industry.
That's true. They're a lot of work. They're a lot of work. I mean,
my brother has too. They are a lot of work.
They charge a lot of money because you got to clean up after everybody every time.
Yeah, it's rough. Here's somebody from the Midwest. So if you're from the Midwest, you're really enjoying where Tina's sitting right now in the third day of March outside. And the only hardship is an occasional leaf blower. So,
and a plane going over.
yeah. It's ambient noise. It's great. So we're seeing houses come back on the market from the past month. Is there a trend of desperate buyers falling out of contract? In other words, buyer fatigue? Yes.
Not once they're in the contract.
I
would call that. Yeah, not here. I would say that there is a fallout rate, but the properties go right back on the market, and then boom, contract within the day. So I'm not seeing a huge fallout rate here. But when you're a buyer and you have landed the contract because you've shortened the inspection period sometimes, or sight unseen, you've had to put your contract in before you've actually seen the home. And if you have sellers that are accepting those, then you're going to see a lot of fallout. Once they see the home, they're like, oh, this doesn't work. This doesn't fit my couch. This doesn't whatever. And then they back out. And that's not uncommon. Also, it's not uncommon to see buyers with multiple offers on multiple homes. And if they get the one they want during their inspection period, then they'll find some reason to cancel. And also you've got, and that happens with cash buyers too. Cash buyers tend to be king, so they get pretty spoiled. They get their contracts accepted even if they're not the best offer because they're cash. And again, if they have multiple offers out there and they get another one, they may find a reason to cancel because they can. They don't have a problem getting their contracts accepted. You get somebody who's lost out on 8 to 10 homes, they are not canceling during the inspection period.
No, but I think what I meant when I said, I'm seeing a lot of buyer fatigue. I am seeing, and I know talking to other agents that some of their buyers are like, I just can't take this anymore.
Yes.
Yeah. And they're waiting. So we do have that, but I think if you're selling and all of a sudden your buyer backs out, just on the phone, all right, send me the other one. I mean, it's not much of a delay anymore.
I'd say it's probably not a bad idea to throw your contracts in backup offer. I mean, it used to be that they'd just walk away, be like, whatever, we're done. But throw it in a backup offer because you don't know. So often the home comes back on the market, but if you're not already in backup position, you don't have a chance to get it again. If you're already in backup position, you at least get first right.
So I guess the answer to the question on where's inventory going to be in 3 to 6 months has a lot to do with what happens in April, how big is that number of homes come on the market, and how quickly those will be absorbed, which I would estimate now is probably pretty quick.
Well, here's the thing, that you won't see a shift in inventory, in my opinion, until you see demand come below normal. So right now, as the last time I checked, we're at 19% above normal for our typical demand this time of year. Now, back in December, we were 35% above normal. Okay, so we've been coming down. We've come down quite a bit since then, 16 points. Now, at that rate, right now we're coming down at about 7 to 8 points a month. So we could be at normal demand, not supply, normal demand within a couple of months. And a couple of months after that, we could be below normal demand. And part of that is because of the interest rates. Part of that, all of that works into affordability rates and have the incomes, come up with it. But we saw that increase in interest rates over the past couple of weeks. And we started to see that demand line come back down. So once that, give it about 3 or 4 months. After that goes below normal, which we don't like, by the way, but if it does, we will start to see the supply rise. But because demand is still so high and supply is 76% below normal, 76, actually, I think it's 77 now. So it went down another
Well,
percent.
it's not normal to have 2 zip codes with absolutely no homes.
Yeah, we're 77% below normal for supply. So even if that supply line starts to move up with the demand coming below normal sometime most likely in the second half of 2021, we will still see the prices rise, just not so quickly. We'll see fewer over asking price. We'll see maybe even somebody gets a few concessions, but we're not going to see prices decline. That's the thing. It just eases up on the pressure on the buyer. And frankly, with the seller, who notices the difference between 25 offers and 10 offers to 5 offers?
Yeah, that's right.
Multiple offers or multiple offers.
Yeah,
it really eases up that pressure.
I don't like it when I have a listing and I have to go over 15 offers. You have to put a spreadsheet out and they got this and this, and then they got those escalation clauses like, just give me a drink.
Yeah. Right. Yeah, no, it's stressful. I agree. And that's just the direction that we're going right now. So we can make that prediction right now. And I don't like to say predictions, actually. I like to say what's reasonable to expect. And what's reasonable to expect with interest rates coming up and affordability getting below our normal levels over here in the last couple of weeks, it's reasonable to expect to see that demand line come down. And now all kinds of things can happen that will pop that demand back up. Like if there's a government program, you never know who's going to start throwing money at real estate and trying to fix some of the problems either with supply or demand or whatever. But at this point, if we stay on this trajectory and there's nothing to interrupt it, that's what we're looking at.
Well, Tina, I want to thank you for joining us today and let you get out to enjoy that freshly landscaped area that you're in, and it's well groomed now.
Yes, I think they chopped down a tree or something.
Now you can listen to the replay later, on YouTube, and you'll hear what I mean. You barely hear it. There's only a couple times it's, but it adds to the love of Arizona. This is what we hear in the morning, right?
That's right. It's the sound of life in the morning. You get to come out here, have coffee. I'm one thin layer this morning. It's beautiful. It's beautiful.
Yeah, fabulous. Well, thanks again, Tina, and I appreciate all your insight.
Yeah, my pleasure. Thank you for having me.
You bet. Take care.